Paul, the recent downturn in the stock markets is also spilling over into the private equity market. This year, venture capitalists are expected to drastically cut the amount of money they invest in new companies. From Chicago, Diane Estabrook looks at the funding crunch.
Perceptual Robotics Incorporated makes software for remote-controlled cameras. Companies license the software so they can broadcast images on their websites. Chicago Venture Partners has already invested more than $2 million in PRI. It wanted to take the firm public this year, but now those plans are on hold.
We are just not counting on going to the public capital markets anytime soon, either for liquidity for our funds or for cash for growth for our companies. It's just shut down.
The dizzying plunge in the stock market is already sending shockwaves through the private equity market. Many venture capitalists aren't pouring money into new companies if they don't think they can take those firms public quickly. VCs invested a record total of $68 billion in young companies last year. But while investment started out strong in the first quarter, they fell the following quarters. Industry watchers expect private equity investment will slow to a trickle this year.
I guess dramatically we will see a cut to about half. There will be a 30 to 50% fall off from last year's total annual investments. We're guessing somewhere in the order of $35 to $45 billion.
Alter says it should not come as a surprise that venture capitalists are shunning the battered business-to-consumer and business-to-business e-tailing sectors. What they are funding are companies developing internet software applications and biotechnology firms involved in genomics. Venture capitalists are also looking at companies that have a better chance of becoming profitable sooner rather than later. And some VCs, like Bond French, are getting the biggest bang for their buck.
Because if they think it's going to take $200 million to get a company profitable, and it's only going to be worth $500 million, and in rough terms they're going to make 2.5 times on their money, that may not be worth it.
Industry watchers say even if the tech-heavy NASDAQ market rebounds, young companies should not expect an avalanche of cash from venture capitalists to start heading their way. They say typically VC investment lags the public markets by 9 months to a year. Diane Estabrook, Nightly Business Report, Chicago.